Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to share some ideas that I had with you on two of the major NASDAQ components that I will be tracking tomorrow. The first we're taking a look at is Netflix, and part of the reason why I like giving this analysis on this chart is because I feel that all in all it is extremely mixed. Obviously we found a lot of strength off of these recent lows, but then paused at the 200-day moving average, not to mention 100, somewhat of a psychological area, and a price point that we may bounce around on for some time. Okay, if that is a concept that you can agree with and you'd like to try to work a strategy around it, what might you use? When I look at this, and of course it's going to be best if we can actually see some type of a pullback tomorrow in the stock indexes, but then what I'm going to be doing is taking something like saying, what was this decline that preceded the rally? What point value was this? And how does it tie in to a decline that we might go through tomorrow? Okay, 96.49. Obviously that's a pretty fair percentage from where we're currently trading. Maybe I don't get to put it on tomorrow, but I make this point to say at the very least, if we are to open down here, what is the first thing that most people are going to do? They're going to want to panic and get short, and that is one of the best opportunities as an options trader to fade that. So if you're able to slam down into this level, I think this would provide a good point to look at for support, and I like the idea of setting up a variety of butterflies, just something that would utilize the short 95 put as part of that strategy, and then look for Netflix to trade range bound into next week. I think next week's options would be fine for that. And if you'd like to go out just a little bit further, you'll be able to get a better price on those. You just may have to sit on it a bit longer to see it come through. Another is Apple. Now this is one, and in the commentary for this I said, barring any calamities, we don't want to get too carried away with this. You can see it hit a level of symmetry this morning already, but more so what I'm looking at in Apple is that if we take our swing low to swing high that we have here, that if you come down anywhere into this 94, 93 area, I would be applying the exact same strategies. So just looking at points where you're not getting down here and saying, alright, this is the spot to load up on puts, but instead saying, can I use a risk-defined theta positive strategy to try and benefit over action like this over the next 7 to 10 days. So that'll be my focus as we head into the employment data. Hopefully gives you a couple of ideas to work your strategies with. And then one last thing I wanted to make sure you guys were aware of is a webinar that will be going on with John and then Chris Brecher. This will be next Tuesday, June 7th from 7 to 8 Central, where they will be covering the Dynamic Options Trader Blueprint. Essentially, what I am looking to get out of this is that Chris uses a lot of shorter term day trading type strategies, and John tends to be much more aggressive than myself. If you combine the two of these, you're going to be able to find just shorter term aggressive options trades in areas where I think you'll be able to make some good shorter term trades. So if that interests you, be sure to check it out. Like I said, that's next Tuesday, and you'll have an option to sign up after the video, and I hope to see you there.